Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, March 24th, 2014. Brought to you by Triton Wave Consulting, home of the Triton Waves. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. All right, I want to start off with this group of indicators that I follow. The ES, let me get a line tool up here real quick. Okay, the ES, hang on one second, let's change the color on this to magenta. Okay, the ES, Aussie yen, the yen, gold, and all right, I had to change it around. I had gold twice. Gold, the dollar, and copper. Okay, so one of the things I wanted to point out was that as the S&Ps, this is the old highs in the S&Ps, and when they were making new highs up here, the Aussie yen was not making new highs. They were matching their own highs here and not making new highs. So it was partially risk on, but not as much risk as the S&Ps were taking. Okay, the yen did not make new lows as the ES was making new highs. So in fact, it made a subpar low and then started higher. These are all signs of a either intermediate or permanent top. Gold actually went with the S&Ps, then came down with the S&Ps, which hasn't been normal in this market. It's usually it was normal for a while that it was tracking it, then it became a counter indicator, and now it's become neutralized, because when this came down, and now it's kind of sideways. And we'll take a look at gold in more detail. The dollar was going down as the ES was going up, but this was a very, very strong candle here. So if this is a reversal, this should take it back up to the 82 area. If it's going to follow through, which I think it is. One of the main indicators that I like to look at is copper right here. And copper, while this is going down mildly and this is going up, copper has made this incredible descent here, and especially in this area here at the beginning of the second week of March. So that's why I thought this market was coming down, based on what I'm looking at there. All right, let's take a look at gold. When I did this last video last Sunday evening on the 17th, gold was right up here, and I said don't chase it, wait till it comes down to one of these trend lines and it hits 1380, and maybe you can find a bid in there. So I was looking for a bid in there, and all of a sudden this is what I saw. If you draw this straight down like this, you see the Triton waves. These are all new and updated Triton waves. They're all starting to come below zero, and this is below, and this was skimming. So all of a sudden, the idea of trying to find a bid in here, 380, was completely negated. And all of a sudden, I'm starting to look for a short entry. So this is kind of blippy here. I'm not going to trust that. I'm not going to trust that. But I am going to trust this because it hasn't been below zero yet. So when this starts going to below zero, I'm looking at it seriously. And when this happens, when this third wave is going down, and then decidedly when this wave goes down, we're at about 372. So you have to give up a few points here. But from 372, and then you can just ride this all the way down to right about here, which is like 1324. So I don't know, 72, 34, 32 is like 50, so 48 points. So that was a really, really nice move of 48 points after this surprise takeoff last Sunday night. Now, right now, we're looking at gold. This is a live chart of gold. It's down 160. You can see here, right in here. It looks like it still wants to go up a little bit. I'm not sure about it. So let's look at a 144 chart to see what's going on. It looks like it may not be done on the downside. Okay, because now on the 144 continuous minute chart, we have where it went up here back in December. And if you actually did a long-term, if you're a long-term player and you just rode it up from about 1220 all the way up to here, you would definitely be out either when Triton Wave 2 goes down or Triton Wave 3 goes down right in here. So we might be looking at a little bit more on the downside here until this decides to turn up, and then we'll look for short-term plays. But if you are a part of Triton Wave Consulting, then you get these updates continuously. So since this is now below zero, I'm going to change this color here for a second. Back to yellow. Okay, since now this is below zero, then any place to the upside will be counter trend plays. So a full resumption of the downside on the 987 tick chart right here is if this stays below zero and then T1 up here goes below zero. So we have to wait for that to happen. When that happens, I'm sure it's not going to happen tonight because this is the 987 tick chart and it slows down. It's not going to happen until full activity happens during the daytime on Monday, and you'll be able to see that. Well, I'll be able to see it and send you notification. Okay, looking at the ES, big picture. This is the weekly chart. It closed at 1857, and right now it's up 75 cents, 0.75. It was up a couple hundred, 250, down 200. It's finding its wings on a Sunday night. But one of the things I wanted to show you was that, if you recall from past videos, this purple line here is the 1272 extension from back from 2007 to 2009. All right, and we're hovering right at it. We made a big attempt to, it came right down to that line, a little bit further the next day, the next week, and it's hovering just above it right now. This is still trending up. This is flattening out. This is flattening out. So it's really a seesaw event, whether this goes sideways and then blows to the upside or just comes down. Now these are, because they're weekly, they're going to be slightly lagging indicators. So let's take a look and see what the daily is doing on that same subject. Now the daily is, if you squinch this up, you can see that it took off. Let me see here. Okay, so even on the purple one, on wave 1, on T1 right here, the purple one took off right around November of 2013 and got this huge chunk here. And this purple line has been down above zero the whole time, went below. Let's squinch that up a little bit. Okay, went below in February, then kicked up higher, bounced off this EMA, went higher, and what I wanted to show you is two things. First of all, one of the things that these waves are really good at is non-conformational sizes. So there was a higher high with the ES, higher high here lately in March, and a lower high right here. And not only was there a lower high, but one of the key, one of the significant signs that I've seen looking at these waves over the years is that once it goes below zero, comes above zero with a higher high and a lower high, and then comes below zero, that is definitely a watch out because it may cave to the downside. Okay, so let's move this out again and see if this is going to be below zero. And what I wanted to point out to you was, if we stretch this out and look at this, this is, if I move this over here, on the dates are on the bottom when I'm using the pointer. So this is 3/21 on Friday, and everything is above zero, 0.02 and 0.26. Move this to the fresh start of trading on Sunday, and this moves to 0.2 and minus 0.05. This is a telltale indicator right here of where, of the direction that this market is heading. Right there, that's little tiny nibble right there. All right, let's break this down a little bit further, and we'll look at the 144 chart. Now the 144, this is a continuous time frame up here, 24-hour time frame. It gives you heads up about what happened back in this area. So when white went below zero, you took a little bit of heat from here to here, and then boom, this is what you caught. Okay, down to the minor support level. You let it breathe a little bit on the smaller time frame charts. You actually could have played this as a counter indicator. Comes down a little bit. These are still below zero. This T2 is gaining more strength below zero. T3 is, you can see by this little number here, it's almost on the edge of zero, and T4 is 2/3 below zero. This is a group of three waves right here. So I'm voting in favor of the downside. That's how I'm looking at it, and I'm playing stocks to the downside. So let's take a look at a few stocks here. Let's look at everybody's favorite. Actually, let me just look at the 55 on this to see if we can. Not much we can see here. It's still going sideways to up, even though T3 and T2 are hovering around zero. This is below zero. This is below zero. Let's see if we can get anything from the 21. These are happening after the move, so that's of no interest, except for the fact that right here it's gone below zero already from the action on Friday and the action on Sunday night. Let's look at a 987 tick chart. Okay, this might be interesting here. On the 987, back in here when it went above zero, this was a nice play. This was on Tuesday. Let me see when this was. Hang on. Okay, this move was on Thursday. Bing, all above zero, and it moved up here for a day and a half. So there was a nice play here from 1850 all the way up to about here when it goes completely below zero, or you can take this one a little bit earlier. So it's in this area, but it's a nice it's a 20-point move on the S&Ps. And then definitely when this comes down, you want to look for a shorting opportunity, but you want to wait till this is all blank here. So that happens right about here. You take a little bit heat. You take a, you know, you can take a 15-point heat here, but look at what you're getting for a reward. And of course, then you want to get out of it, cover it right there, and just wait and see the bounces that it takes. So right now I'm looking at T4, T3, T2 below zero, T1 when when it gets when it reaches its peak, it looks like it wants to come back down again. Okay, now we're taking a look at Apple. You can see this is on a daily chart. If you just follow the new waves here, uh, this is these are just like huge moves. These are 200-point moves before this comes up. This is a daily. You basically short this and walk away. And you can look at it once a day, you can look at it once every few days, because once this goes below zero, it's not going to change. And you save yourself the headache of, you know, watching it go against you 5 points, 10 points, 15 points. But generally, the trend is down. When it comes back up here, or it hits one of these major EMAs, then it goes back above zero. Boom, there's another 130-point move. And this is getting ready to roll over right here. It'll be like 2 or 3 days, but when this rolls over, it could very, very well. This is going to bust through the minor wave at the Triton minor wave at 503, and it could possibly take it down to 432. That would be my first easy target on Apple. If you want to look at Goldman Sachs has made a nice run. It was down 227 on Friday, and it's made this run. It's made this nice run against all these major waves on the downside, and they're even creeping lower on T3 and lower on T4. So this may not be the best, even though on a shorter time frame, it looks better. You can have more plays on it. This is not something that I would want to get into on the long side now. But let's look at it on the shorter side. That still looks good on the 144. Let's look at it on the 55. 55 looks like it's wants to move down a little bit. Let's take a look at the 21. 21. Okay, I hadn't even looked at this before. 21 on Goldman right here in the second week of March. Boom, right in there. And look at this move. This is from 173 down to 164. You can take profits anywhere along the way, or use a shorter term time frame to get out, or just use the daily to get out. But you're going to miss part of it by giving a little bit back. So let's see what this is on a 144. I don't know if I have. Let's just do the 3 minute. That's hard to see. It's just better to go with the 21 minute. That 3 minute is a little iffy. All right, Netflix had this huge move for the downside, $18.28. $18.28. On the 55 minute right here, it crossed the zero line at almost the peak, so 1450, 1460 area, and it closed Friday at 407. I think it hit 402, but as rolling waves, you can look at it this way. You pick it up here, a little bit up here. If it rolls into the next one, you can pick up more, and then just watch it. The line in the sand is this has to roll into this, has to roll into this, and also into this. So at this point, it may try to come back up a little bit because it was such a huge move on Friday. Let's look at the 21 and see what that looks like. That may be good for another 10 points on the downside before it has any hiccup, because this is the major wave right here. 395. Let's see what the major wave looks like on a 55-minute chart. Okay, the major wave is too far away. It's possible it could, instead of 395, it could just, I think there may be a little bit of bounce there, but this is all looking very down for Netflix. Bing. There's probably going to be a little bit of a bounce here, or you can play the bounces. Let's look and see what a 144 looks like, or let's do a 3-minute. All right, so even if you were just playing the 3-minute chart on Netflix, the 3-minute chart being right there and right there at 420, and it goes up to 420 right here at this crossover right here. It's about 424. So you really didn't make a big deal, 4 points in 2 days. But really the biggest one was on the drop down when it crossed over on T1 right here on Thursday evening. And you can either buy for the next day, either sell calls or short the stock, or buy puts that are like 50 to 70 delta for the next month, 5 weeks away. Buy yourself the gift of time. But that was a nice, that was probably like a 200% move for that one day on expiration. Triple witching. Oops. Okay, taking a look at Amazon. Amazon back at the end of 2013. It looked like it was going up, and there was no stopping it. Everybody was getting on the bandwagon, and all of a sudden T1 crosses below 0. Well, let's make that a little bit straighter. Right above here, near the high at 400. It did go past that, and if you're in the 144 minute, there's only like 3 marks to a day. So this is about like 4 days worth, and you took some heat on it, but look what you got. You got a solid 50 points in about 2.5 days, which was really nice. And that's really all you need. You get out either at you can start trailing stops. Either you get out at the minor wave or start trailing stops. And even though it bounced off of here, the minor wave bounced off several times and back up. It's at the 50% retracement. But even more important than that, these are 2 of the 3 waves on T5 are below 0, and all the rest of these below. So let's look at a smaller time frame on Amazon. Okay, on the smaller time frame, this is the 55 minute, and same rule, and it showed itself the same when this went below 0 on T3. This is up here. Right around 400, it did take you like, this is about 2 weeks worth, and then the plummet, and then T1 came below 0. So 55 is actually a better representation, because when that went up, boom, that came up to a 50% retracement of this, and this, and now this is headed below 0. This is only good to the downside if this indeed does go below 0, And then if it does, our target is the major line, which is 340. So this back to the ES. Finally, before we wrap this up, it's up 75. When we started this, it was up 150. So it's just back and forth filling. There's still. I was actually at a concert the other night, and there was some people from Poland worried that Russia was going to invade Poland after they're done with Crimea. And there's really serious talk and worry in the Polish parliament about all that happening. And so the geopolitical picture and what's happening to the Russian ruble and their economy because of all this can be quite devastating to what's going on in the market. And as long as the dollar keeps moving up, and as long as, let me see if we get this dollar picture here right. So the dollar right here, as long as this keeps moving up right in here, and as long as copper keeps going down, then this is not going to be able to sustain itself on the upside. So I am looking for the markets to be a little bit schizophrenic on the downside and not a move up, because it's very, very well priced at this point, and they're looking for reasons to buy, but I don't think anybody can find them. Okay, that's all I have for tonight. Enjoy the rest of the weekend. You can pause this right here to see what Triton Wave Consulting can do for you. I am looking for people that want to trade gold that I can be a consultant for. You can just read that, see if you decide that you're interested in it. This is for advanced traders or experienced traders only. And you can email me at rodneyjulian@gmail.com, and I will see you at the next. I'm sorry, I gave you the wrong email. You can email me at tritonwaveguy@gmail.com. Again, have a great evening, and I will see you at the next update, and good luck trading.